Hey guys, so wow, this was quite the week here with all this bank stuff. I know I didn't get a chance to make a video last night. We were just really busy and I didn't get back till late and couldn't do it. But so we are looking at a possible bank run, they call it. So essentially what's happened, if you guys have missed 2 days of news somehow, is that Silicon Valley Bank out in California, they are basically a big bank that I guess they're the 18th largest US bank, but they have a lot to do with basically startups, and they do a lot of funding for startups, obviously being in Silicon Valley, tech mostly. And essentially what happened is that they just are having some liquidity issues and basically getting essentially margin called. And this is just sort of starting off yesterday. It started a cascade of things. Um, so now the question is going to remain, is this a one off event for that bank, or are we seeing a true financial collapse basically happen before our eyes? As of right now, there's a lot of reason to believe that this is a one off event, which means that this is isolated to them. There may be other dominoes that will fall down the road. However, as of right now, there's a lot of reasons to believe that basically um, this was a one-time thing, and possibly the market obviously reacted to it, and now we're just going to have to kind of see how markets continue to react, basically going forward. So Monday and this weekend are going to be a big deal. We're going to probably see some news about what's going on and just kind of where we're at, and that's going to be a big deal for sure. So taking a look here at the market, from Monday's high to today's low, we had about a 5.7% drop, or about 23 total dollars. And from just yesterday's high to today, we had about a $17 drop for about 4.3%. So this rally over here that seemed pretty incredible, that looks like nothing compared to what we just went through. So with this being said, we are set up for a pretty good reversion to mean to the upside. Basically, like what happened here, we just had such an incredible push that we needed to revert. So Tuesday is CPI day, for those that you don't know. That'll be a big deal. As of right now, a lot of the numbers I'm seeing are fairly good in the sense that it shows that CPI should still be coming down. So now with the fact that we've actually had some pretty bullish economic data come in on Thursday and Friday, if that CPI comes in bullish, like I'm suspecting it to, we actually could see a pretty incredible rally this next week, because markets are going to go from pricing in basically 50% chance, 40 to 50% chance of a 50 basis point hike, to pretty much 100% pricing in a 25 basis point hike, if not even thinking about a 0 basis point hike. There's some chatter now because of this bank issue showing that there's obviously issues out there, that this could be enough reason for the Fed to pause early. So that's something very interesting to keep in mind as we go into CPI next week in FOMC. So basically what we're set up here is we have this really nice falling wedge here. And we kind of came just short of this supply, which is now support down here at 383.8. My upside target, if we are to recover, is first going to be 388.7. But the biggest thing that happened is we lost this 390.1 pivot point. With losing this and closing below it, one should suspect us to continue down to this really 378 support area. However, you can see the same thing happened in a similar case back here in January 19th. We lost it, but then we pretty much retook it and we continued our way up. So this will be a big pivot point for sure, and I will definitely be interested to see where we land on Monday. I more or less expect a pretty choppy consolidation day on Monday, and then from there we were going to get a big day on Tuesday. If we happen to get a big hot CPI, I think we're going to see a really big meltdown in the markets. But if we get that good CPI, I think we have a lot of things supporting, and I'll get to that, a really big rally next week on that numbers. From a weekly standpoint here, you can see we're kind of still in this higher low, or higher high, lower high, or geez, higher high and higher low pattern. So we kind of started, we went up, we came down, we're going up, coming down. We haven't quite broken the low yet, so we could still see a pushback to the 420s if this pattern continues. But something that's really interesting is how much time we have actually spent trading really in this 375 to 407 area here. Let me get to my numbers real quick here for us. So in that $32 range, all but 5 of the last 44 weeks of trading, so a total of 88.6% of the last 44 weeks of trading has had price action occur within that $32 range. And of the last 44 weeks, all but 13 of those weeks, so that means 70.5% of the time, the market has closed in this same $32 range. This range is pretty incredible and it is a magnet. This is where the majority, and I said this back in really November, December area of 2022, that this is where we're going to spend the primary of our time. And I said, when we break out into this gray channel here, it's going to be a time for look for a retrace. Same thing with down here. So now we're kind of at a really, really big pivot point. If we lose this 382.5 weekly support here, then I'm really going to start looking for some downside. And we might even think about a retest of the weekly 200 EMA, but I think we would see the 360 to 370 area. I still don't think, unless this becomes a black swan event, that we will see a new 52-week low. However, if CPI comes in good, we could see a really nice double bottom here. Kind of, I'm trying to see if I can see a good example where something like this here, where we come down and then we bounce really aggressively. But we could see a nice double bottom area here, or even a bounce off 382.5. If the bulls can take back 390.1 next week, then I really do think we have a pushback to the 396 to 400 area. Taking a look at futures here. So this trading view updated last night for the new contracts of futures. So prices is off a little bit. I mean, you can see it says we closed down 0.57% when we actually closed closer to negative 1.44%. So it'll take about a day or two for us to really like normalize, and then you'll be able to tell. It'll be easier to track this, but we're still in a nice bear channel right here. We do have a really nice falling wedge form right here. Same thing here, though. We did close, and regardless of the new contract, we did close below key 3920 pivot point. So same thing. This is basically the 390.1 level on SPY. So with this closure under that level, really you would think about start targeting 3810 support area. That's where we were trading back here in December. However, if the bulls can bounce us and we can retake 3920, then we start thinking about coming back up here, maybe even into test the 4000 to 4020 area. It's really hard to give a good read about where we're possibly going to go next week, because it all really is going to come down to CPI. CPI is going to be a big day. We could get a really, really big day up or down. Just depends on what the data comes in at. Taking a look at weekly here, so we have a really huge bearish engulfing weekly candle here. So it's kind of interesting. We came down, we double bottomed to immediately double top, and now we're coming down. So we could see a similar break or double bottom here off this 3900. New contract 3895 and bounce us back up. However, we really have a big support target down here at this 3860 area. If we lose 3860, then we really start thinking about 3770. But really, bulls are going to want to get back over 3975 minimally next week in order to really prevent a pretty good sell-off from happening. So the VIX had a really incredible day here. I mean, it had a high day of 28.97, highest level it's been since October 25th, which actually, interestingly enough, if you go back here, October 25th is right here. And SPY traded within 378 to 385, and today we traded 384 to 393. So honestly, not too far off in that range, which is kind of interesting to look at. But the one thing to see here is this massive wick here. So there was obviously moments, if you watch the VIX throughout the day, where the VIX was really pushing up, and we were seeing, I mean, straight up breaking out, but then it would have other moments where it would completely unwind. So I feel like there's still fear in the markets and unknown, but I don't see the fear setting in like we have seen in the past, where it's just like a constant push up and holding something like this back here in like April, even in September, and you kind of got the June, and this is back in January when it first started, the sell-off and stuff. It just doesn't seem like the same move yet. So this will be interesting to see next week after 2 massive green days on the VIX, if we're going to get a retrace on the VIX or not. We didn't quite get the 30, which is interesting, but we did poke through that level. And we're now trading back in this gray level here, which we've only closed one candle back on December 12th since November. So that's really interesting. Take a look at the dollar here. One thing that was interesting is the dollar really sold off this morning, which showed that there was not a lot of confidence in the dollar, obviously with the bank crisis that could be happening or financial crisis. However, by end of day, you can see here, most of that losses was recovered. So this loss being recovered right here shows me a lot of strength. And to me, that shows that despite what happened, that this is more or less a one-off event. And I really do think this shows that we're not going to see the full, complete financial meltdown yet. Now, obviously, anything can change over the weekend. Anything can change in the future here. But as of right now, I don't see enough to believe that we're going to have a full-on meltdown yet. One other thing to keep in mind here too is that we are breaking this rising wedge here, which should lead to upside potential. Usually when the dollar drops, stocks go up. Dollar rises, stocks go down in general. So this is interesting with this rising wedge breaking. And I mentioned yesterday the rising wedge on the 10-year had broken, and then it really sold off today, or rates really dropped rather. So this big old drop right here, which this is the biggest drop of 5.27% that we've had since back here on January 18th. We had another one here on January 30th, but this is the single biggest really drop since November 10th. So with that, let's see what happened on November 10th here. Let's go back to November 10th. So here was November 10th. Oh, look what day that was. That was November CPI. So interestingly enough, with that drop in the 10-year rate today, basically what this shows is that people were scared. People ran to safety of the bonds and the yields. So with that happening, this really, from what my understanding is, provides a lot more upside risk than downside. When rates are super, super high, there's a big chance that people are going to, take their money out. However, when rates are so low right like this is people want to buy. They want to buy that. And the risk is to go back into risky assets, which would be the stock market. So very interesting trend to watch here with this rising wedge breaking, the dollar's rising wedge breaking, and we're in this falling wedge here. So if we break out here also, especially with CPI being good, I really do think we're set up for a pretty massive rally. Last little thing to talk about here is just Bitcoin. So Bitcoin actually had a pretty decent day if you look at it. I mean, it's only down about 1% right now. It hit a low of 19.5K. We are trading just over 20K at 20.2K right now. But Bitcoin actually looks like it's going to start recovering. So big eyes on crypto this weekend and see what that does. If that shows some strength, that could show some strength going into next week also. And I would again expect to see more upside next week then. So, all right, I hope you guys had a good week trading this week, and I will see you guys next week.